Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. You're fired. President Trump moves to oust Fed Governor Lisa Cook over mortgage fraud allegations. But Cook is fighting back, disputing the president's authority and refusing to resign. Digital tax backlash, fresh tariffs and export restrictions threatened on advanced technology and semiconductors as Trump hits back at digital services taxes. He says it discriminates against U.S. tech giants. And reciprocal measures. Israel lauds Lebanon's move to disarm Hezbollah, offering to draw down its remaining troops on Lebanese soil if the government follows through. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Bersechi in Dubai. So much for a quiet August. We walked in this morning, so much news to pick up on, not least the news that President Trump is moving to oust the Fed Governor Lisa Cook. She's obviously pushed back in the last hour or so it's a matter for the lawyers now. But again, raises once again questions about the Fed central bank independence and, of course, who possible replacements could be and whether those replacements, and that includes the Fed chair himself next year, will be more dovish than the current board. So big possible implications for markets as well. But the reaction today on back of this news and other news that Trump may be looking to apply further export restrictions on semiconductors means that we're trading with a bit of a risk-off bias this morning. We've got S&P futures down about 0.8%, not meaningfully, but we'll get into some of the price action in Asia in just a moment with David Ingles, but a little bit of red on the screen there. Two-year yields up at 3.70. What we are seeing is further move downwards as the market prices in, again, a more dovish easing cycle out of the Fed. But that's just the front end of the curve. The back end, 10-year, 30-year, are moving up in yields, i.e. the curve is steepening. I'll show you a chart in just a moment. USD is slipping on the news as well that the president has moved to oust this Fed governor. And then the euro in focus this morning, not only because of the price action, the greenback, but also developments in Europe with the French Prime Minister, Bayrou, overnight saying that he is going to hold a confidence vote on September the 8th, which, by the way, he is most likely to lose. So once again, France is going to face the prospect of finding a new prime minister. It's been a really difficult task for the president over the course of the last year. Anyway, going back to the U.S. yield curve, this is where we're at, 230s. That's the spread between the 30-year yield, two-year yield. It has been a trend of steepening, as you can see, from sort of middle of 2024. We are now at the steepest level since 2022 with no signs of that steepness abating. Okay, let's check in on how markets in Asia are faring as well. David Ingles is in Hong Kong. David, run us through the price action.
Yeah, I'm negative, but I guess just to borrow your phrase, not a lot really as far as sort of the conviction goes, with the exception of Japan, I should point that out, because most of the drag that we're getting actually at this point in time and at the time of the trading day, and we're looking at the benchmark for down about 0.7%, is really down to a lot of the big names in Japan. Now, the jury's still out in whether or not we will get a down day in Hong Kong. We're at the lunch break. We're also at the lunch break on mainland China. And flip the page, please. Because we are starting to come off lows there, and we're actually getting some buying coming through across some of the big names, which I'll show you in a moment. But to just the point I was making earlier on, right, a lot of the big momentum and large cap plays, including, I should also mention, Alibaba, Samsung Electronics, you have TSMC also, and SoftBank really doing the drag today. But again, not a lot there. Volumes are actually not as heavy as one would expect given the news flow out there. Just very quickly on the Chinese front, as we go into the lunch break, of course, we talked about some of the counterweights. So BYD's actually doing some contribution as far as the upside is concerned. There's this cohort of game makers. I'll talk about this a bit later on, but that's also leading to some gains there. This is really one stock to track, Cambricon Tech. It's really one of the favorites in the onshore market rally, and that's pulling back after, gaining 550%, by the way, over the last 12 months or so. So there is some temptation to take money off the table. And we're trading near one-month highs, a little bit closer to the highest level of the year on dollar China. I'll talk more about some of the progress we might see this week here, Jaman, as far as U.S. and China trade negotiations are concerned. There's a report out of the Journal today that talks about progress perhaps this week there. Jomano.
Yeah. David Ingles, thank you so much, as ever, David, in Hong Kong. Now back to the main story this morning. President Trump has moved to oust a Fed Governor Lisa Cook following allegations that she falsified mortgage documents. But Cook is pushing back, saying she will not resign, and the president has no authority to make her do so. News desk editor Balazs Pans joins us for the latest. So I guess the question then becomes, Balazs, does the president actually have the legal grounds to fire Lisa Cook?
That's exactly the question, Jumana. The president has dramatically escalated his attempts to control the Federal Reserve and U.S. monetary policy more broadly, kicking it up a notch beyond the earlier pressure campaign, the war of words that we have witnessed. Lisa Cook has pushed back pretty strongly through her attorney. She told us that she's not stepping down and that the president has no authority to fire her, which suggests that there will be a lawsuit coming. It could be a lengthy litigation process, and it will center around that authority, that question whether there is cause established by the president to fire her. And it remains a question whether she will be able to remain on the board while that litigation continues, or whether she will need to step aside for the duration. So there are a lot of unknowns still in this case, and we expect to hear a lot more in the next few hours as we try to find out from our sources in the White House and the Federal Reserves about how this is going to play out.
Yeah. Okay. So there's a big question mark about exactly how this is all going to play out, because it's going to be one for the lawyers, but it will have an impact on markets, on investors, on those watching the Fed, because it could potentially open up another seat. There are many other vacant seats also on the board as we speak. What are the likely implications for monetary policy? Does it just follow through that this is going to automatically lead to perhaps a more dovish Fed in 2026?
That's certainly the read of the markets. We've seen the reactions on the dollar, on bond markets. We have some voices indicating that there is some concern building about over-easing by the Fed. I mean, look, when it comes to the next rate decision in September, after Jackson Hole, it seems like a rate cut is pretty much baked in, although we do have a lot of data still coming through between now and then. But more broadly, we know that President Trump has been seeking a more dovish Fed. He has one nominee potentially coming in. If there's another opening, if Lisa Cook has to leave, we can assume that there will be another more dovish member coming in, and that could have broad implications, because that would tilt the balance on the board. It would be a 4-to-3 split on the board toward the more dovish side, and that could have broad implications for long-term U.S. rate policy.
Yep. At Bloomberg News Desk editor Balazs Pans, thank you so much for running us through the latest on the Fed. But that is not all President Trump is threatening, because he's also threatening new tariffs and export restrictions on advanced technology and semiconductors in response to digital services taxes imposed by other countries. News Desk editor Jill Deeses joins us for more. So, Jill, help us unpack this one. Essentially, the president is warning that they could go down the route of export restrictions versus the countries that apply digital taxes.
Sure, Jumana. So I think, the first thing to really think about this latest threat is that, despite the fact that the president has touted that he's orchestrated all of these trade deals over the past several months, the trade war doesn't really seem to be going away. This time around, he seized on this idea of a digital services tax. This is something that he's brought up before as leverage in various types of trade negotiations, I think most prominently with Canada, which was considering implementing this type of a law in which they collect revenue from these major technology companies. Trump said that it's places like Google and Apple that would be most impacted by these types of laws, by this types of revenue collection and this tax. And he, managed to sort of push Canada into a position where they ultimately took that digital services tax off the table earlier this year in order to continue trade negotiations with the United States. Now, this time around, in this particular threat, Trump didn't name any specific countries. I will point out that there are places like the UK, some parts of the European Union that do implement these types of digital services taxes. Whether this evolves into something greater, I think, we'll ultimately have to see. But it does also show that Trump is obviously willing to, resort to things like export controls and such in order to, try to force the hand of other nations that he thinks are playing unfair with the United States.
Yeah. And meanwhile, for countries that have already come to an agreement with the U.S., the case of South Korea, for example, the president met with President Trump yesterday, tried to renegotiate, perhaps look for more favorable terms, but with no success.
Yeah, Jumana, I think that in the case of that, meeting between the new president in South Korea and Donald Trump, really, the outcome isn't really that bad. I mean, if anything, sometimes some of those meetings with Trump can become quite heated. So this is, the new president of South Korea, Lee. He comes in after what I'll point out was a really tumultuous political period within the country. There was a martial law imposed by the prior president at the end of last year. Quite a lot of turmoil to sort of handle there. Trump actually referenced some of that in some statements ahead of this meeting. What they ultimately got out of this was that 15% rate that South Korea and the United States negotiated that went into effect, that remains. But what we instead got was a flurry of new deals that were announced. As part of that trade deal, South Korea said that it would invest more money in the United States. It looks like what we got out of this was a pretty significant aerospace deal involving the purchase of about 100 Boeing jets. You also had various other commitments involving automakers and such. So at this point, it does seem like the new president of South Korea has managed to keep trade negotiations on track with the United States, even if they didn't get any kind of a lowering of that 15% overall rates.
Jill, thank you so much. Jill Desus, News Desk Editor. Now, still ahead, we'll get the market outlook with BlackRock Investment Institute amid trader concerns surrounding the Fed's independence. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersetchi in Dubai. Well, the dollar dropped and traditional safe haven assets advanced as President Trump's move to fire Fed Governor Lisa Cook stokes concerns over the central bank's independence. Joining us is Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. So much for a quiet August morning. Lots to go through from the overnight news. Let's just start with this move out of President Trump to oust Lisa Cook. Obviously, she's pushing back now.
Yes.
I don't want to minimize from the situation that's going to go on there because clearly it's going to be one for the lawyers. Mm-hmm. But is there a trade to be done out of this? The market is reacting, I would say, perhaps moderately. We're seeing a little bit of weakness in the dollar, small declines in equity futures. Is there anything to be done on back of this news?
Good morning. Yeah, we think so at the BlackRock Investment Institute. This is another example of the heightened uncertainty, which is now something of a structural feature which is going to persist for years to come. So we think about approximately the last 10 or 20 years, this time called the Great Moderation. I guess with hindsight, we can say, Joanna, that it was relatively predictable and we had high degrees of conviction as investors in the future kind of path of policy. Inflation was low, rates could be very low and stable. And with hindsight, the living was relatively easy. We are not thinking of Jackson Hole. We are not in Kansas anymore, I think it's fair to say. Much more volatile, both in terms of the kind of normal economics-y stuff, inflation and whatnot, but also in terms of the institutional feel and reality. It is clearly a very different playbook that this administration is running with. So as investors, we need to think about that uncertainty, be compensated for that, and what that should mean is higher term premium, and that's why we at the Investment Institute continue to be underweight longer duration US Treasuries, mainly for that term premium uncertainty reason.
Okay, yeah, so a steepener trade then. Okay, so let me ask you a question. Why do you think the Fed Chair Jerome Powell sounded so dovish last week at Jackson Hole? Was it because he was succumbing to political pressure, or because the data warrants it?
No, I think the data. I think he's fiercely independent. Our take on this, that he's still very much playing the data as he sees it day by day. And he feels, I think, that policy is tight, Therefore, they can loosen a little bit and still kind of remain restrictive. They're in a very difficult spot, right? So notwithstanding the political stuff, which is obviously real and significant, just the paradigm of trying to balance the growth and inflation mandate, clearly they are in different directions at the moment. Inflation too high, which should suggest kind of tighter rates, growth maybe slowing a bit, not too much, which suggests perhaps there should be loosening. So the two sides of the mandate are in conflict, which is just difficult, even regardless of the political context. So he's trying to square that circle. I thought he did a fairly good effort at doing that. It's just a really tough spot to be in, but they think they can cut a little bit and still be restrictive, which is trying to balance that, a little bit of cutting to help the employment growth side while still staying restrictive to speak to the inflation, which is still a problem, I'm afraid.
Yeah. Okay, so the perception on the street is that whoever is going to be succeeding the Fed Chair Jerome Powell will be dovish and perhaps more aligned with President Trump's own views of where monetary policy should go. How far does that go, though? Will it go as far as this Fed saying, you know what, we're going to completely overlook one side of the mandate, which is inflation and inflationary pressures, in favor of keeping interest rates low to keep the economy churning?
We don't think so. I mean, the Fed, the independence of the Fed is a crown jewel of American exceptionalism. And kind of giving that away would seem careless, I suppose. So I think we won't see something that extreme. I'd also say, just en passant, if you look at Trump's track record of appointments, including, by the way, Chair Powell, right? He's a Trump appointment. So Trump's appointments in the round, it seems to me, across the spectrum, actually, including the Supreme Court, people may disagree with this statement, but none of them are kind of too outlandish so far. Actually, there's been a lot of rhetoric and excitement, understandably, but the picks have been, again, including Powell himself, have actually been relatively in line with a kind of right-of-centre political, Republican political worldview. So let's see, but I think it's unlikely that Trump would want to do something so market-damaging, and I think that would be against sort of trying to make America great again, whatever that may mean.
Or even so inflationary that people start complaining about a cost of living crisis again.
Exactly
what he doesn't want to hear.
Exactly. So I think Trump is, how can I say, he is responsive to market and public feedback. So doing something that would be, I think, so obviously market negative and, to your very important political point, probably politically negative, seems like something he would rather not do. Playing the kind of rhetorical game is obviously something he greatly enjoys, kind of just putting these thoughts out there in a very new and dynamic way, let's say. I think that's going to continue, and that's something we're all going to have to get used to.
Okay, so avoiding long-end duration, playing for perhaps lower front-end yields. What are you thinking of credits here? I'm sure later on in the show we've got a segment on credits, and the whole conversation is going to be about exactly how tight credit spreads are. Can you find value in this environment?
You can, but you've got to try a bit harder. So I think in this new, more volatile world, just kind of being long and don't touch it, which worked really well, by the way, during the Great Moderation. It was just a risk-on environment. We're now in a much more, as I mentioned, complicated, volatile world, and we think it is therefore necessary to have a more active approach to investing. That's kind of true across the board. We think you're going to need to have to pick spots, be more selective, and be a bit more dynamic, have to set kind of your frames more frequently. We think that's true in general. It's particularly true in credit, where, as you say, the general pricing level is not that attractive. So we're going to have to be a little bit more thoughtful on exactly where, exactly what duration. It's alpha, we think. Final
question on equities. Our great colleague Tom Keane brought this up in an interview with Jackson Hole, and I thought it was a really good observation. He's saying essentially right now in the U.S. you've almost got two-speed economies. You've got the AI economy, the tech that's powering U.S. equities returns, and then you've got Main Street, you've got consumers worried about the impact of inflation, tariff, losing jobs, and so forth. Which one of those drivers is going to continue to power equities? Is it going to consistently stay in the tech basket, or at some point will the U.S. equities have to catch up with some of the concerns on the Main Street?
It's the big companies. So for now, the constituent weights means that it's disproportionately the AI megaforce, as we call it, is going to continue. So there is a kind of strange disconnect maybe between the U.S. economy and the U.S. kind of feel more generally and the U.S. equity market. We as investors need to recognize that, and that's why NVIDIA tomorrow is probably even a bigger event than what's going on with the Fed today. So to answer your question directly, Joanna, it's the AI megaforce which continues to keep us bullish U.S. equities from here.
Yeah, okay, that's a good place to leave it. And a reminder, once again, NVIDIA earnings are tomorrow. Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Well, coming up, the French government risks collapse, I should say again, as the Prime Minister calls for a confidence vote. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. President Trump says the U.S. has more leverage over China on trade than the other way around. He cited airplane parts as a key item Washington has to counter Beijing's restrictions on rare earths. Meanwhile, a senior Chinese trade negotiator is reportedly heading to Washington this week for what could be the first round of negotiations in the U.S. Capitol. That's according to the Wall Street Journal, which says Li Chenggang will be meeting with the trade and treasury representatives later this week. The report comes as both sides extend their pause on higher tariffs through early November. The Trump administration is working to halt development of another offshore wind project planned near Maryland. The Interior Department plans to move to remand and vacate a permit granted to the project, which was approved by the Biden administration in 2024. It is the latest escalation in the president's war on the clean energy source he loathes. Aggressively and specifically targeted wind power, Trump has often called it a bird-killing eyesore. That's after work on an 80% complete offshore wind farm being constructed by Denmark's Ørsted was halted on Friday, which sent shares of the company to record lows. The French Prime Minister François Bayrou has called a confidence vote on September the 8th that may topple the government as soon as next month. That's prompted a sell-off in French assets as investors hedged for more political uncertainty. Bayrou is trying to consolidate support after facing pushback against 44 billion euros of spending cuts and tax increases, measures that he considers vital to avoid disaster for France's public finances. And Australia has suspended operations at its embassy in Tehran and given Iran's ambassadors 7 days to leave the country in the first such expulsion since World War II. Prime Minister Anthony Albanese says credible evidence has been uncovered that Iran was behind several anti-Semitic attacks, including one on a Melbourne synagogue. The nation will also list the Islamic Revolutionary Guard Corps as a terrorist organization.
These were extraordinary and dangerous acts of aggression orchestrated by a foreign nation on Australian soil. They were attempts to undermine social cohesion and sow discord in our community. It is totally unacceptable, and the Australian government is taking strong and decisive action in response. A short time ago, we informed the Iranian ambassador to Australia that he would be expelled. We have suspended operations at our embassy in Tehran, and all our diplomats are now safe in a third country. I can also announce the government will legislate to list Iran's Islamic Revolutionary Guard Corps, the IRGC, as a terrorist organisation.
And coming up, Israel says it's willing to start withdrawing troops if Lebanon moves to disarm Iran-backed Hezbollah by year's end. Details later on the show. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. You're fired. President Trump moves to oust Fed Governor Lisa Cook over mortgage fraud allegations. But Cook is fighting back, disputing the president's authority and refusing to resign. Digital tax backlash, fresh tariffs and export restrictions threatened on advanced technology and semiconductors. As Trump hits back at digital services taxes, he says discriminate against U.S. tech giants. And reciprocal measures. Israel lauds Lebanon's move to disarm Hezbollah, offering to draw down its remaining troops on Lebanese soil if the government follows through. It's just gone 8:30 a.m. across the Emirates, everybody. I'm Johanna Versace in Dubai, waking up to a lot of news, once again, out of President Trump, moving to oust the Fed Governor Lisa Cook, also weighing further export restrictions on semiconductors and key technology against those countries that apply digital tax. And mainly, let's be honest, that's mainly the EU that he's targeting here. So the picture for equities this morning, leaning towards the red, it's somewhat of a dip. We've got S&P futures down about 0.1%, though bear in mind, it's a big week coming up. We've got PCE data coming out, inflation data coming up later this week. And then we also have NVIDIA earnings. So that will be a big driver of demand for equities as we think about the playbook for the rest of the week. Two-year yields we saw move downwards after the Lisa Cook news came out, about 1 basis point lower. But of course, the move has been significantly lower since Jackson Hole. We're down about 12 basis points as the market moves to quickly price in a more aggressive easing cycle. USD slipping a little bit this morning, down 6 basis points. And then the euro also in focus. We're trading just shy of 117 here. A lot of attention now is going to be on France as we get into the European session. We saw a tumbling in the pricing of some of these French assets as the Prime Minister called for yet another confidence vote on September the 8th, where he is likely to lose. So that's something to think about for anyone looking at European markets. Switching over, though, I do just want to draw your attention to the fact that the U.S. yield curve continues to steepen. And so this is a chart of 230s, which is essentially the difference between the 30-year yield and the 2-year yield. It has been on a steepening trend since mid-2024. It's not the steepest it's been since 2022. And bottom line, what's happening here is the market is positioning for a more aggressive easing cycle at the Fed, but at the same time, perhaps concerns about inflation, fiscal premium, term premium, all of these things in the long end of the curve. Earlier, we were speaking to BlackRock, and he was saying that their preference is to be positioned in the long part of the U.S. yield curve. This is one of the reasons why the 2-year, 30-year, and also 2-year, 10-year spread continues to steepen. Okay, let's check in also on how markets in Asia are faring. David Inglis is in Hong Kong. David, break it down for us.
Yeah, so we're looking at, I think, similar to what we had there with U.S. futures. Initially, when the news broke around Donald Trump and Lisa Cook, what we initially saw in the Asia Pacific was really a drop in the dollar, followed then by a reaction in rates, not so much equity markets, which then following other news around tariffs and the digital tax. Now, I'm putting everything together. It's really an environment where there's not a lot of risk on the table, at least on the benchmark basis. And a lot of the drag we're getting there is down to India and also down to what's happening in Japan, which is underperforming the market. The jury's still out. We're on the lunch break, of course, for Chinese markets, and we'll see how things reopen in the afternoon session. But we are coming off lows. Volume is still very, very heavy in these markets. Flip the page, please. And certainly one stock to watch on the CSI 300 is this one right here. Cambricon Technologies is really one that's really led the rally. And as you can see, money's being taken off the table, at least for today, although this stock is also coming off, I believe, lows at the session. Alibaba's on about 1.2, and just an indication, I guess, of some of the AI plays getting pared back a little bit. Samsung, TSMC not on your screens, and SoftBank also among the sort of momentum in large cap flows that we're seeing coming out of this market. But apart from that, nothing really is happening across these markets. Jumana.
That's still quite a lot to get through. David Inglis in Hong Kong, thanks so much.
Yeah.
Well, the dollar dropped and traditional safe haven assets advanced after President Trump's move to fire Fed Governor Lisa Cook. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Garfield, so there has been somewhat of an impact on some of these key financial indicators, but not hugely so. It's a little bit of a dip in the USD. 2-year notes are maybe 1 or 2 basis points lower, small pullback in equity futures. Why not more, do you think?
Well, Jumana, one of the things that I think markets are waiting for is how U.S. investors and also how U.S. society will react to this move from President Trump, which is, it's not unexpected, but it's still a shock. So just exactly what goes on there is going to have an impact. But also, taking a step back from it, the tradables, as it were, out of this are confirming that the Fed is likely to cut interest rates when it meets in September, middle of September. We're all pretty clear that that's going to be 25 basis points unless you get a dramatic drop in jobs, say, in the data that comes next week. So that's sort of nailed on there, along with the risk that when the Fed makes that announcement in September, that it uses relatively hawkish language. It says, we're cutting 25 basis points now because we see risks to the labour market, but then we're probably going to hold off to see how things develop. And if the Fed says that, President Trump will get very excited that they're being too late and too slow, and so the pressure on the Fed will increase. So what's gone on today hasn't really shifted that picture. There are a lot of uncertainties about whether Lisa Cook will be in place for that meeting or not. She has denied that President Trump has the authority to fire her like this. She's going to take that to the courts. That could take a long time to play out. So there's plenty of uncertainty there. Over the longer term, over the short term, the picture hasn't shifted that much. And from the equity side, at least, you might care more about what's going to come out of NVIDIA's earnings. Do you really want to sell stocks here and then have NVIDIA shoot the lights out and you miss out on the next part of the rally?
Yeah, good point then on NVIDIA. Our guest earlier on the show said the same thing. Let's look ahead to the European session. We're likely to see further falling out with some of these French assets. The Prime Minister is calling for a confidence vote on September the 8th. What can we expect?
Well, we can expect plenty of uncertainty about the outlook for France and for France's assets, at least through to September 8. It's a minority government. You've already had some of the main opposition parties saying that they will vote against the government and against its budget plans. So there's going to be plenty of negotiations going on inside the French National Assembly and plenty of opportunities for investors to step back. And that's why we could expect today to see, while Asian equities have bounced back a bit, US equity futures have also come back to be a little changed after some modest declines. But European futures are looking much grimmer about the outlook, and that's appropriate because we're going to get this uncertainty. We've got French Oust futures, the bond futures, they're down today, and Bund futures are up. So you've got a rush for European safe havens and a real sort of unwinding of what had been, European assets had looked like they were edging back towards the front-runner status that they had in the early part of this year, when Europe's unity and relative stability and capacity to cut rates and boost spending in a fairly stable and a cogent manner. That's now been unpicked. So suddenly Europe is looking like it should be the laggard again rather than the leader. So plenty of pain for European equities and also for European bonds outside of Bunds. And the euro is going to struggle across a range of crosses, especially my colleague Mark Cranfield was pointing out. You could probably expect to see the pound in particular climb against the euro.
Yeah, well, I mean, the OAT futures in the red, CAC 40 futures also pointing 1.7% lower, so shaping up to be quite a day of red for European assets. Godfrey Reynolds, who leads our Markets Live Asia coverage, thank you so much. Now for a look at some of the other stories we're following. Elon Musk is suing Apple and OpenAI, accusing the two companies of thwarting competition from other chatbot makers. Musk's X and XAI are seeking billions of dollars in damages. Their lawsuit argues that Apple's decision to integrate OpenAI into the iPhone's operating system inhibits rivalry and AI innovation and harms consumers by depriving them of choice. The case sets up a high-stakes court showdown between the richest person on the planet and one of the world's most valuable companies. And Israel is praising the Lebanese government's push for Hezbollah's disarmament. The Prime Minister Benjamin Netanyahu's office says it is prepared to scale back its own forces if Beirut follows through. For more, Bloomberg's Dan Williams joins us now. Dan, I was in Lebanon the last couple of weeks, and this decision out of the Lebanese government, the cabinet coming together, the announcement to fully disarm Hezbollah was a major deal in Lebanon. Yesterday, we got the first response from the Israeli Prime Minister's office. How significant was it?
Well, if you read the print, it's a hedged overture, but nonetheless significant. Keep in mind that Israel and Lebanon have for decades been technically in a state of war and remain so. But much has changed inside Lebanon during this regional war, ongoing war, that began in Gaza, continues on several fronts. Israel really delivered damage to Hezbollah, an Iranian-aligned militia within Lebanon. It would appear to have changed the power dynamic there, and the new government in Beirut now appears set on disarming Hezbollah, other non-state actors, as part of a wider effort to stabilize the country, to rein in the economy. You have the United States that's invested in this, and Israel making this offer, again, short on detail, but saying it would be willing to support this and withdraw troops who remain in 5 outposts just over the border since a November truce ended the majority of fighting between Israel and Hezbollah in Lebanon.
Yeah, so supportive of the decision by the Lebanese government. And of course, the question remains as to whether there will be follow through. Hezbollah themselves are being defiant. The leader saying yesterday that they won't fully disarm unless Israel fully withdraws. So there's a sequencing issue here. What role is the U.S. playing in getting this across the line, Dan?
Well, we have mediators who were in Israel just 2 days ago. Then they continued on north of the border. They're also working on stabilizing the border between the new Syrian government, Syria and Israel. That was another front of this war. I think the Americans are hoping for a broad deal across Lebanon and Syria with Israel. Not peace, we're not there yet, but a newfangled, perhaps non-belligerence deal, perhaps security arrangements. There are other elements that would have to be sorted before those countries would be willing to make peace. But given that there is war still raging in the Gaza Strip, there's still fighting with Iranian-aligned Houthis, there's still tension between Iran and Israel, this might be seen as a welcome development on 2 of the fronts of that regional war.
Yeah, Bloomberg's Dan Williams with the latest. Thank you so much. And coming up, we take a look at the state of the credit market in light of record tightness in spreads. That's next. This is Bloomberg. Let's turn to the credit market. Spreads may be seeing record tightness and priced to perfection, but there are risks. Could credit be too complacent? For more, we're joined by Mahesh Bhimalingam, Global Head of Credit Strategy at Bloomberg Intelligence. Mahesh, just taking a look at how credit spreads are trading, I mean, some of these indices in the U.S., for example, investment grade, you have to go all the way back to 1995 to get to this level of tightness. We're talking pre-financial crisis even. So I don't think there's any dispute that credit spreads are trading tight. The question is, why are we trading so tight in credit these days?
Yeah, I think that's a great start. So the thing is, we're definitely, whichever way you look, whether it is in Asia, Europe, or in the US, we are at post-2007 tights, surely. I mean, given the recent events, there's been a tick up in spreads a little bit, but nevertheless, we've hit 2007 tights. Why is that? It's because corporate fundamentals are holding up quite well through tariffs. Defaults are very low. Even if you look at, between investment grade and high yield, you're still seeing more names go up from high yield to investment grade. As you can see on the chart on the screen, you can see that spreads have hit post 2007 tights. So the point is, fundamentals are justifying the tightness. But there is a bigger reason, because the game in town is not credit within itself. The game in town is credit relative to its main alternative, which is government bonds. Now, people think of government bonds as, the risk-free. So there, I think credit is looking a lot attractive.
Yeah. Okay, so is there money still coming in to credit at this juncture, given just how tight spreads are? Yeah.
So I alluded to the point that credit is looking significantly attractive to rates. Now, why do I say so? It's because if you look at the return volatility of rates versus the credit return volatility, you can see that credit is post-pandemic at least 3 times less volatile, and depending on which point you're looking at, it's probably 4 times less volatile, as you can see on the chart, right? That's annualized volatility of realized volatility of rates and credit returns. Now, this has driven quite a bit of flow into credit. Now, there are a lot of investors within fixed income, like, bank treasuries, insurance, and so on, who particularly insurance, where their benchmark rate is the corporate bond rate, right? So they can't get enough of credit product, and also the fact is we aren't seeing as much supply, unlike in government bonds where they are forced. So which brings us to demand, as you alluded to. Is there a lot of flow? Yes. So except for that liberation month, where you see that outflow in red, after that it's been this tremendous inflows into credit, particularly even in the riskier parts. So high yield has seen like 2% of AUM, very strong.
Yeah. Okay, interesting. Also, your point about vol-adjusted returns, really notable versus the Treasury equivalents. But let's look ahead, right? And we just came from Jackson Hole. The Fed Chair, Jerome Powell, started to sound a little bit more cautious about the dynamics of the U.S. economy. If the U.S. economy does start to slow down, how could that manifest in credit spreads? I feel like it would be very difficult to justify these types of valuations in an environment where the U.S. is significantly slowing down.
Correct. So the risks remain, like particularly what is going on with the Fed and what they will do. That's one. Then any sort of inflation take up in Europe while growth slowing down is also a risk. So are we in like the perfect scenario to justify 2007 kind of spreads? Probably not. But the point is, it's all about the alternative. If you look at governments increasing deficits, they need to borrow more, demographics are getting worse. So in that scenario, credit is looking like a better alternative. Now think about it. Would you lend to a company which regularly makes losses and increasingly makes more and more losses, which is the case of governments, right? So 'cause it's all about the alternative. So credit valuations may not be as great as before, but compared to rates, they're looking better. That's the point.
Mahesh Bhimalingam, thank you so much for joining us on the show. Great to have your perspectives on some of the dynamics going on in global credit markets, Global Head of Credit Strategy at Bloomberg Intelligence. And coming up, South African tax authorities are eyeing more of the wealthy to help boost government revenue. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. South Africa is looking to tap into its growing millionaire class to shore up state's coffers. The Revenue Service is considering lowering the threshold for its high wealth tax unit to boost government revenue. Our Chief Africa correspondent Jennifer Zabazaja joins us from London. So talk us through this decision. Why is the South African Revenue Service considering this change now?
Well, Jumana, this isn't the first time that we've actually seen potential considerations around a so-called wealth tax, especially in South Africa. The issue has been in the past, though, there's quite a lot of debate about whether or not it's actually the approach that the Revenue Service needs to take in order to generate revenue for the economy. But really, if we take a look at the current moment and the year that we've had, I think you can remember earlier this year where a budget took several months for the National Treasury to actually table, and part of the opposition to the budget was this proposed VAT hike. Many people within the Government of National Unity were opposed to it, and so the fact that that was not able to get over the line then left a 75 billion rand, or just over $4 billion hole that was plugged in. And so now we're hearing from the director of the wealth unit within the South African Reserve potentially saying that they will look to, or they're thinking about potentially different criteria in terms of, or whether or not they could potentially garner some more revenue from these higher net worth individuals. But if you talk to many people within the country, everyone has a different take on this, and whether or not it's actually beneficial for the country is still up for debate.
Yeah. I mean, I remember at the time when they wanted to push through the extra VAT tax, how contentious it was. It was very difficult for the government to get the budget passed. We covered that in detail. How likely is it that they're going to be able to push through this wealth tax, Jen?
If that's any indication, that debate that you were just referring to, Jumana, it could be quite difficult, especially if you take a look at a number of analysts and what they say about the potential for this. The concern is potentially what it then does to the higher net worth individuals and whether or not we actually then see them choosing to go and take their capital to other countries. We've seen that in other parts of the world. And so there's quite a bit of debate about whether or not this is actually effective. When it comes to SARS in particular, Jumana, many people suggest that it's not, in fact, taxing the higher net worth individuals that SARS needs to focus on, but instead being a bit more effective in order to generate and collect taxes among a number of individuals within South Africa. And so it still seems like we're a bit of a ways off, and potentially the director suggested that if they were to consider any sort of changes, it would be in the short term to just assess how this could work. But we should mention that there's only a small amount of the population that's actually taxed, or that revenue is actually, taxes are actually collected from. And so we'll actually see whether or not this actually gets over the line.
Yeah, that's the other problem, actually collecting the taxes to begin with.
Exactly.
Jennifer Sabazaja, our chief Africa correspondent in London, thank you so much. Well, just a recap of our top story this morning. President Trump has moved to oust the Fed Governor Lisa Cook following allegations that she falsified mortgage documents. But Cook is pushing back, saying she will not resign, and the president has no authority to make her. Cook added she will continue to carry out her duties to, quote, help the American economy, as I have been doing since 2022. Cook's lawyer, Abby Lowell, said they plan to take whatever actions are needed to prevent Trump's illegal actions. So that set the tone for today's trading. We are seeing equity futures dip a little bit in the red this morning, and keep a close eye on European markets as well as we talk about yet another confidence vote that's going to take place in France on September the 8th. And that's it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe.